So let's go into a deep dive on HIMS. First of all, I think this is a company that is going to 3x within the next 2 to 3 years. The growth that they're doing throughout their company, subscriber-wise, free cash flow-wise, revenue-wise, EPS-wise. I mean, you could just go on and on with this company. Their growth is absolutely phenomenal. We're going to highlight some of their recent quarter earnings from this past week. We're going to talk about their guidance for 2030 and what they guided in 2022 for 2025. So they've done this before, that 3 to 5 year out guidance. And as you can see with the chart here, it is just set up absolutely perfectly. Now with HIMS, you know there is going to be, if you traded HIMS before, if you watched HIMS, you know there's going to be pullbacks, okay? I'm always looking to buy more pullbacks here. I have equity for this name. I'm looking to buy long-term calls for this name 2 years out. Absolutely phenomenal stock. So let's kind of go into the earnings that happened earlier this week, okay? Kind of just made it through ChatGPT, so it made it a lot easier. Gave you guys a quick points here. So they delivered an impressive quarter one, revenue exceeding 111% year over year to 586 million, and their adjusted EBITDA hitting 91.1 million, both above expectations. Their subscriber base grew to 38%, and what you don't to 2.4 million subscribers. And what you don't see here is that their personalized subscriptions are at 60% now, and I think that's a big part of their company that a lot of people kind of shrug away as being part of their moat or part of their major growth in the industry. Now, their guidance for 2020 for next quarter did come in a little bit below estimates, which is perfectly fine, okay? Because they still had inline guidance for the end of the year to be in line and or exceeding what they currently had for their 2025 guidance. Now, here's that very interesting part, okay? Back in 2022, the company set a bold 2025 target of 1.2 billion in revenue, and they are now exceeding that goal by literally 2 times. They're doubling that goal from 3 years ago on what they're expected to have at the end of the year in revenue of around 2.3 to 2.4 billion. Same thing with their EBITDA of 295 to 335 million. And just quarter one alone, they had 91 million. They're expected to basically double that as well. Now they're suggesting for 2030, they're going to 3 times the company basically in their financials. They're expecting for 6.5 billion in revenue and 1.3 billion in adjusted EBITDA. That just screams excessive cash flow. That screams obviously that their plan is working and they're executing on their strategy. And overall, they're going to be producing and sending out more supplements